Good evening, everyone. Welcome to Closing Comments here on January 20th. Let's jump right into our charts and see what happened in the markets today. First up, we got our April live cattle on the board. Last week, we did see this live cattle market roll out of that February contract and over into April, making this a new front month contract going forward. Last week, we did see a pretty nasty finish with Friday's action breaking all the way down to that 50-day moving average. However, we did see a nice little bounce off of that 231 and a quarter level, which was the low of the day on Friday, finishing back up there right around that 20-day average. So far here, we are seeing good buyer support to start the week. Nice little inside day here, trading in about a $1.70s range as the bulls continue to hold this market up right on top of that 20-day moving average. We expect to see this buyer support continue early this week. We still could see this thing kind of pull back down here in between the 20 and 50-day averages and pick up some more buyers at some lower prices. But this is a good step in the right direction here for the bulls, as we saw good support at that 20-day during Monday's session. Bulls want to continue to get more support down here in the low 230s, and if they're able to continue to get some rolling bids rolling above today's high at 235.5, that should kick this market back into gear and keep this uptrend rolling. The uptrend still remains intact, and we expect to see the buyers hold this market here early this week. Bids above 235.5 should kick this market back into gear and get us marching back up there into the 240s. Look for the upside to continue here across the live cattle market. Next up, we got our March feeders on the board. Good support here today to start off the week, as well as the bulls stepped in and supported this market near the bottom end of Friday's range. We were briefly limit down there on Friday, but still able to stop the bleeding here to start the week. Prices held above Friday's low at 355, showing good buyer support here in between our pivot points for the week. We want to see the bulls continue with bids above 359 tomorrow to keep this market rolling. If we see that happen, we should see the bulls start to take this market back up here towards 370 and start to attack this overhead gap. If this market does start to flush back down here below 355, look for a quick mark down here towards 350 to 351 and try and find some more support at that 20-day moving average. We still have a lot of good buyer support all the way down here to the 50-day moving average. We've got a lot of buyer support down here as this market has seen really good relative strength over the last month or so. We expect to see the feeders turn this market back up and continue higher as this big picture uptrend still remains intact. Next up, March corn futures hanging steady here today. Prices just trading with a nice little inside day. Tight range in between our pivot points. Not a whole lot to be expected out of this corn market at the moment. We are a little bit extended down here at these levels, so we could see a little bit of a relief rally coming back up here towards the bottom end of these range lows and try and find some more resistance up here at these declining moving averages. But at the moment, as long as we're churning around here between 420 and 427, not a whole lot to be excited about here in this corn market. Look for this choppy action to continue down here at these oversold levels. Wait until we get a break beyond either one of these pivot points before we can get a directional move. Next up, crude oil prices, trying to find some support here today. Prices briefly swinging down below 59 and Friday's high at about 60.05. This market trying to find some support and churning around here in about a $2 range today. Prices are going to continue to battle it out here as price has been pretty sticky right around the $60 price point in this crude oil market. As long as we're staying above 59, the bulls are going to continue to try and chop this thing up here in the low 60s. But if we do start to slip back down below our moving averages and that $59 level, close beyond that should kick this market back into the downtrend mode and keep these prices slowly drifting lower. Next up, our equity indexes taking a hit today. S&P and the Nasdaq indexes breaking down below their yearly opening range lows as well as their 50-day moving averages. This puts us into defensive territory, and we encourage everyone to start to be a little defensive here and raise cash. As we are trading below these levels, we could see a little bit more of a corrective move come into play like we were expecting back here in November. So far, though, we are seeing good supportive action here in the Dow as we are still trading above the yearly opening range and that 50-day moving average. So the Dow has been where the strength is, so we could still see some support here in these Dow sectors. Look for those sectors and industries to continue to try and find support. However, the Nasdaq breaking lower, closing at new yearly low today, and starting to slip a little bit, pulling the S&P with it. This is telling us to start to raise cash a little bit and get defensive, as we could see a little bit more downside come from this. We are still expecting to see a big picture upside here throughout the year of 2026, but here in the near term, we could see a little bit of volatility as we're starting to sell off here below our major averages. We want to see this thing kind of pull back and have a little bit of a corrective move to get us a better opportunity for the upside here into year end. But in the near term, we could see a little bit of downside here in the S&P. We want to see the Dow try and find some support here, but if we start to trade below the opening range low for the year and that 50-day moving average, I'd encourage everyone to get defensive here as well. But if you're going to remain invested in this market right now, the Dow index and Dow stocks are going to be where your strength is. So look there for the flight to safety while the tech sector is trying to find its legs here to start the year. That's all we got for today. Thank you everyone for tuning in. We'll catch you guys tomorrow night.